It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. U.S. futures gaining along with Asian chip makers as NVIDIA's upbeat outlook reinforces optimism for the global AI boom. Korea, meanwhile, unveiling a $19 billion of funding for its own semiconductor industry. Also ahead, Anglo American agreeing to talks with larger rival BHP, opening the door to what could become the biggest mining deal in over a decade. Plus, we get the outlook for China's summer vacation season and outbound travel with Trip.com CEO Jane Sun. Let's get you to markets. Avril Hong on top of developments. And Avril, it is about chips. It is about higher for longer. We heard that from not just the Fed, but RBNZ as well as the BOK.
Yeah, there is this push-pull in terms of monetary policy, but also those earnings from NVIDIA delivering. On the monetary policy front, we saw how those FOMC minutes in particular coming in more hawkish, perhaps more than Powell actually let on during his post-decision speech, and that is bringing out the resurgence in the dollar. It's putting pressure on Asian currencies, particularly on the Chinese yuan. We're seeing dollar China hovering at the 725 level. The PBOC seems to be leaning into this, though. It set the fix at the weakest level since January, allowing those declines. We're seeing the Korean won also coming under pressure, no thanks to the strength in the dollar, but it mostly held steady after the BOK kept rates unchanged as expected. Now, yen has been moving up towards 156.9 earlier in the session, a bit of a recovery there, but I also wanted to highlight what we're seeing in Chinese equities, deep declines on a day where the other counterparts are clocking gains. There's also those concerns, I think, about geopolitical tensions. Meanwhile, on the Hang Seng, leading declines, dragging the index down, Alibaba. On the CSI 300, those material stocks. But Has, as you say, it's about NVIDIA and how, even though there was a high bar, it really delivered. And from what we're hearing from the CEO, Jensen Huang, it sounds like it's more to come. Have a listen.
Has begun. Companies and countries are partnering with NVIDIA to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence.
Now, that's all good news for Asia chip-making stocks. You can see it's green on the screen. In particular for TSMC, this is a company that exclusively makes some of NVIDIA's chips. And it also could help it to kind of buck the trend given the muted recovery we're seeing in memory, or rather in PC, as well as some of the other chips, smartphones and the like. But something we're also seeing is South Korea unveiling this $19 billion support package for the chip sector. This is more than double what was proposed a couple of weeks ago, and it just goes to show you how important the chip sector is for this so-called next industrial revolution. It's also coming at a time when governments from the US to China are kind of pumping in more monetary support, financial support, I should say, to either attract or support the industry. Samsung was flat when that news came out. It's actually eking out a fair bit of gains now. Has.
Well, it's about chips, chips, chips. That story not going away. Let's dig deeper and get market reaction to the chips news out of Korea as well as NVIDIA with our next guest, Lorraine Tan, Director of Asia Active Research at Morningstar. She's joining us this morning. Lorraine, I mean, when you take a look at the forecast from NVIDIA, it does justify the dizzying rally we've seen in chips so far, yes?
Yeah, but not just NVIDIA or what's going on in the AI space. I think for us, we do like TSMC and the Samsung Electronics, but more so also because, inventory levels have normalized. And we do expect the smartphone replacement cycle in 2025 to add a further boost. So all in, we're expecting basically margins to start expanding again for these companies, and that's good news for them.
So there's still value to be had in the AI space, apart from the names that you've mentioned, Lorraine. Where else? I mean, NVIDIA itself up 90% year to date. Surely there are others that will play catch up.
Well, in terms of valuations, we're a little bit less enthused by some of the other names, but we do actually continue to like NVIDIA for the most part. We, as an industry leader, it has a platform that will benefit. In that respect, obviously, if you're looking at who benefits most from the AI push, it's still going to be NVIDIA, and then the chips are secondary. So as far as we're concerned, in terms of value, where value goes, we still like the chips first, but second most, we do not think NVIDIA is overvalued at this stage. So, there's still room.
Lorraine, give us a sense of where we are in this chip cycle, in this AI cycle. I mean, a lot of questions being asked, how much more upside, and surely a correction is coming?
I think if the numbers continue to, definitely on the chip side, I think there's still upside for sure, because we're looking at industries that are supportive to the sector coming back off, excess capacity levels or excess inventory levels that have since been absorbed since the fourth quarter of last year. So that's going to be a prolonged, I think, benefit for the chip names, and we do like quite a few of them going forward. But I think for the AI side, I think this is a multi-year new industry growth that we're looking at. And I think if you have to be exposed to the space, we do tend to like the industry leaders as a result of that. Where it's headed is obviously we have secondary names like Baidu in China, for example, that's looking into this space as well. That whether or not it's going to lead depends on whether it's significant relative to its current earnings. We're probably not seeing that as much yet either, but ultimately these will be new growth drivers for Baidu as well.
And Lorraine, it is a competitive space. Korea, not to be outdone, announcing a $19 billion package for its chip sector. Does it move the needle? Does it make the likes of Samsung, SK Hynix an attractive play?
Well, we already do like Samsung Electronics. We think it's relatively undervalued at the current level. So much for the same reasons, because we do expect an uptick in the cycle and for it to benefit from that. So regardless of the additional support from the government, which is always positive, you don't want it to be the other way, obviously. But we did have reasons to like Samsung even without the additional subsidies.
Elsewhere, Lorraine, let's take a look at China as well as Hong Kong. We're seeing some recovery. Of course, Hong Kong doing better than China in terms of the Chinese stocks traded in both markets. How are you assessing how appealing they are at this stage?
We think there's still a lot of value in the China names, in the Hong Kong stocks as well. I think where we want to be cautious of are those places that have excessive exposure to geopolitical risks, and stick to names that are pretty safely within a domestic area. So we're actually looking at names that have been sold off because of consumer concerns. We do expect that to recover. So one of the sectors that we do like to pick up right now is the China Baijiu names. We do like Lujiu Liaojiao the best relative to some of the best known names like Maotai. We do also like Wuliangye for that reason as well. But that's how we would. We also have Tencent as one of our top picks right now, and it's the more conducive regulatory environment towards the gaming spaces definitely should help Tencent along as well.
Lorraine, a lot would depend on their guidance as well as their earnings. What are you anticipating the numbers to be in the coming quarters?
In terms of I think if you look at macro concerns, obviously the market's going to be driven by what's going on with interest rates in the States. We actually expect the PCE numbers, which is what the Fed will probably look at, and that to start coming off probably in the third quarter. We think that should give a little bit more flexibility for the Fed to cut, perhaps if it can, maybe by 25 basis points in the third quarter, early for fourth quarter. That's still probably our base case right now. In terms of where China is headed, there still is a lot of excess inventory in the real estate space that needs to be absorbed. So what the policies that are being introduced are going to help that sentiment-wise. We do think China is going to grow about 4+%. So it's still decent on a relative basis compared to other large countries. But overall, expectations are there are still obviously some concerns with excess capacity in certain industries there.
Lorraine, thank you so much for your insights today. Lorraine Tan, Director of Asia Equity Research of Morningstar. Now, still ahead this hour, we speak with the founder of Indian private equity firm Kadara Capital, hear about their investment strategies after raising the country's biggest ever PE fund. But first, our exclusive interview with Trip.com Group CEO Jane Sun. Hear their outlook on growth as China's tourism ministry shows signs of recovery. That's coming right up. This is Bloomberg. Welcome back. China's economy may be facing massive challenges, but a key exception is emerging in the form of domestic tourism. The recent Labor Day public holiday saw a 28% jump in trips within the country compared with pre-COVID numbers. Well, joining us exclusively now is Jane Sun, CEO of Trip.com Group, whose first quarter earnings beat market expectations. Jane, always good to see you and have you with us. Do you think the numbers and the recovery has been much faster than you first anticipated at the beginning of the year?
Yes, we anticipate the travel industry in the long run will capitalize on the growth of the economy. And also Chinese people are very interested in travel around the world. So we're very excited for the future growth in the travel industry.
So in terms of what can be expected in the coming quarters, how will recovery be? What kind of pickup can we expect, especially for the domestic travel market?
Domestic travel market is growing very well as the COVID is behind us. We have seen enthusiastic travelers travel around the world. And also the visa restrictions for a lot of countries are being lifted, particularly for Asia. And GCC countries, Australia, New Zealand, these countries are doing very well. Secondly, also there are lots of air capacity being added into this area. So we saw a strong pickup for outbound travel as well. Hopefully going into the summer, we'll be able to further relaxation of the visa restrictions and further addition to the flight capacity, which will enable us to bring Chinese travelers to the rest of the world.
So Jane, a lot of optimism when it comes to outbound travel. The question really is when outbound travel among the Chinese will get to pre-COVID levels, because expectations are not this year.
I think based on our data, the industry recovered to about 70% already. By the end of this year, the conservative estimate is that the capacity will be recovered to 80%. However, for our team, we'll be able to recover fully to pre-COVID level because our customers focus on quality and they normally are willing to travel around the world ahead of the mass market.
Jane, we know that the Chinese consumers are pretty concerned about the recovery in the economy. A lot of them are saving more than they're spending. When it comes to the travel industry, do you see a segmentation, a dual segmentation perhaps in the travel sector where some people are looking for value for money while the luxury sector is also doing as well?
Yes, China is very big. We have 1.4 billion people. So you can see any kinds of consumers. The most expensive tool we sold pre-COVID cost about 200,000 USD, 80 days around the world, and we sold it very rapidly. We also have created old generation, silver hair generation. This is the first generation after the open door policy by China. Right now, they have money and they also have time, and they didn't have to travel during the peak season. So that generation now are willing to travel with a much more flexible time schedule. So that will bring our hotel partners, airline partners, local tour operators really valuable volume during the slow season. Again, the young generation also are very robust. 80% of our customers were born after the 80s. And more than 50% of our customers were born after 90s. They're very energetic.
Right.
They focus on concerts, entertainment. So there is another segment going into the experiential type of travel.
So Jane, can you put a number to it? What kind of growth are you anticipating for the different segments?
Yeah, we anticipate in aggregate growth rate double digits for the next 2 quarters. And going forward, we believe we can look at the GDP growth rate at about 5%. And normally travel industry will add 2 to 3% on top of the GDP growth, and we'll be able to outpace that number.
And Jane, of course, we have heightened tensions between the U.S. and China. Is that impacting travel at all? And is that impacting travel between the two markets?
I think during the challenging period, people-to-people exchange are very important. So China already relaxed visa restrictions for many countries, and Trip.com have seen 400% growth for inbound customers from the rest of the world. So travel serves as a bridge for the people from different background, different countries. We are very committed to our mission. While we are sending people further away, we are bringing the world closer.
So you're saying travel between the two markets is gaining momentum. Can you quantify that for us?
Yeah, the base is quite small after COVID, but we have seen very strong growth among different countries, from China to the rest of the world, and from the rest of the world into China.
Jane, of course, we're keeping a very close eye on the strong dollar and the impact on Asian currencies. Do you find that your travelers are assessing where they can get the most value given where the respective currencies are trading right now?
Sure. For countries such as Japan, the currency is quite low. So you see people from all over the world going into Japan. China right now, the currency is attractive as well. China also have a duty-free island for Hainan. So actually, this is the right time for people who are interested in exploring the histories and also the modern infrastructure to come and visit China.
Jane, always a pleasure to have you on the show. Jane Sun, CEO of Trip.com Group. Plenty more ahead. Keep it here with us. This is Bloomberg. Anglo American has agreed to enter talks with BHP after rejecting a third proposal worth about $49 billion, opening the door to what could be the biggest global mining deal in over a decade. Our commodities reporter Martin Ritchie joins us from Shanghai. Martin, put this in perspective for us. This looks positive for BHP with Anglo agreeing to talks, right?
Yeah, that's right. The saga continues. We thought there was either going to be a deal or no deal yesterday, but it turns out there's an extra week for the two companies to talk. Anglo American has agreed to talk for the first time with BHP, which, as you said, raised its offer for the third time to $49 billion. Now that agreement to talk, we think, is important because it does show that Anglo American is willing to explore the possibility of a deal. Perhaps that valuation that that BHP is now offering is enough to get them to discuss some of the terms. Doesn't mean it's all over yet, or there's going to be a deal, but certainly from the sort of shareholders we've been speaking to in Australia and analysts, they do think that this is a step towards a deal, even if it's not certain yet.
As you said, the deal needs to get done. What will that take?
Yeah, so this all revolves around South Africa. Anglo American has a substantial presence in South Africa. It's got more than a century of history in South Africa. That means what BHP plans to do with the assets there is very important from a political perspective and for Anglo's shareholders. So BHP's plan is quite complicated. It wants Anglo first to sell two of the big South African businesses, then BHP would make that takeover. Anglo doesn't really like that, and they're going to have to find some third way to accede to some of Anglo's concerns, which, by the way, I think are probably shared by some of the government figures in South Africa.
Martin, is there a risk BHP offers too much?
Look, I think this is something that the BHP shareholders are obviously very sensitive to as well. They don't want BHP to overpay for a sort of flagship deal, a marquee deal that would perhaps satisfy the ambitions of CEO Mike Henry, but just actually destroy some of the value. I think a lot of shareholders see great strategic value in combining BHP and Anglo because of their copper assets. It would become the world's biggest copper producer at a time we've seen prices at a record high this week and shortages predicted in the future. But I mean, they obviously don't want to do that at any price, and especially with a transaction that is so complex and subject to a lot of execution risk.
Martin Ritchie, thank you so much for those insights. And speaking of BHP, let's do a check on copper stocks. Copper, of course, easing after surging past that 11,000 mark, retreating from that record on profit taking. Also, demand drop. There you have it. BHP currently down by 2.5%. Mitsubishi Materials lower by more than 3%, and losses for plays in China. Saujin Mining as well as Jiangxi Copper currently down by almost 3% as we speak. We're also keeping an eye on Asian military stocks on the back of Chinese defense holding its biggest military drills in a year around Taiwan. The exercises coming just days after Lai Ching-te took over as the island's new president. There you have it. Gains for those military stocks. North Industries currently up by 2%. Now, still ahead, New Zealand Central Bank plays down chances for another rate hike a day after admitting that it considered the move. This is Bloomberg. Welcome back. China markets just heading to lunch, and the CSI 300 index trading close to session lows. Among the biggest laggards in Asia, by the way, some say the weak yuan in particular weighing on Chinese stocks. Chinese stocks on the mainland lagging peers in Hong Kong by the most since 2011 now. Even as we speak about the equity market, we're keeping a watch on the yuan fix in focus, the PPOC today fixing it at the weakest level since January, suggesting its willingness to see a gradual weakening of the currency as the dollar strengthens. We have the yuan trading at 724.32, pretty flat versus the USD. Some say the fix is capable of jolting global FX, the yuan seen as an anchor for its regional peers. Take a look at that, 724.32. It is a strong dollar story. And a key focus for markets is NVIDIA's earnings, of course. Bloomberg Intelligence says the results confirm strong demand momentum for its AI chips. For more, Asia Tech analyst Charles Shum joins us now from Hong Kong. Charles, what stands out for you from the results?
I think this morning actually result tell us a very good story about the AI demand. Actually, not just that. Actually, the NVIDIA provide a consensus bidding guidance, but also that it actually remove our concern on the AI demand. Basically, usually when NVIDIA actually going to launch a new generation of GPU, and we will see that there's a pause on consumer spending, and also we worry that actually there could be some drawback from the China demand because of the trade restrictions. But what the management disclosed actually has to expel all these concerns. And not just that, we also see that there is actually a new demand driver for the future AI chips. It's not just going to be driven by the spending by those hyperscalers like Microsoft, Meta, but also it seems that sovereign AI is actually ramping up. That would be actually could be a new demand for the year 2025. So that's actually my biggest takeaway for me from this morning's earnings.
Charles, how will this play out? What's the expected impact from these results, including here in Asia?
All right. I think this is not just good news for the NVIDIA's investor, but also for its suppliers, especially for TSMC and also SK Hynix. The management actually revealed that there's still a very strong demand for its next generation B series GPU, and this is actually will be still relying on the TSMC's 4 nanometers node to produce, and also there's this B series GPU. They will also imply that the demand for the SK Hynix, the HBM DRAM chips will be actually double, because the size of every GPU in the GB200 system will be actually double. And one more thing I would just like to highlight, actually there will be actually a very strong demand in the GB200 system that actually is actually adopting the new liquid cooling system. That could be also a good news for those other equipment suppliers that are doing such this market.
Charles, it does seem like everyone wants a bigger slice of the chip pie. We have Korea announcing a $19 billion package. Is that a game changer? What does it mean for competition in that space?
For the actually the incentive package, I think this is actually is for Korean to play a catch-up game, because U.S. and also Taiwan already announced a very generous incentive. Actually, it's more for the Korean government to retain the investment in its local region. Especially, this will be good news for the two giants in the market. That will be the SK Hynix and also the Samsung Electronics. They are all heavily investing in the new generation of chip-making technology for the memory chip and also for the advanced node chips.
Charles, thank you. Charles Shum, Bloomberg Intelligence Asia technology analyst. So it's about NVIDIA, it's about Korea wanting that pie, that slice of that chip pie. Let's get to Avril Hong for a sense of how it's all playing out in the markets. Avril.
Yeah, I think the South Korean government coming through with more money for the sector is providing a bit of a further lift for these chip makers in the country that were already benefiting from NVIDIA's stellar earnings, particularly for the likes of SK Hynix, as Charles was talking about earlier. Samsung Electronics was pretty flat ahead of that announcement on how there will be $19 billion for the sector, and this is more than double what was proposed a couple of weeks ago. Is really running on that optimism that this will help these South Korean chip makers to become more competitive at the time when it's also facing rivalry from these other Asian chip makers. Now, the Japanese chip making related stocks are clocking solid gains as well, the likes of Disco especially, and this is helping the Nikkei to outperform today. Let's flip the board and take a look at what we're seeing on the currency as well, because investors have been digesting the FOMC minutes that came in a bit more hawkish than Powell had been after his decision during the speech. We saw the yen as well as the Aussie dollar earlier in the session losing ground against the greenback. Seems to be recouping some of that now. The Kiwi dollar has been in focus. Remember, Haas, we saw that spike yesterday after the RBNZ said that it had been considering rate hikes, but from what we're hearing from the RBNZ governor today, seems to be allaying some of those concerns. The Kiwi dollar is still climbing, gaining ground against the greenback though, Haas.
Avril Hong, thank you so much for that. And speaking of the RBNZ, New Zealand Central Bank Governor Adrian Orr downplaying chances of another interest rate hike. Speaking with us earlier, he said the RBNZ would only tighten policy more if it needs to contain inflation expectations.
Another rate hike would only be meaningful if we thought inflation expectations were getting away on us again, starting to rise because of the persistence of actual inflation. We know that forward-looking inflation is heavily influenced by the current level of inflation. So that's our main concern. Persistence raises the risks that expectations don't do the job that's needed.
And I get that sort of non-tradables element is going to be crucial here as well. But you said that you have limited tolerance for inflationary surprises to the upside. Is that patience kind of almost running out? Do you look at that second quarter CPI print as the one that maybe makes or breaks that decision to go again or not?
No, we're not hinged off any one statistic. And no, patience hasn't run out. What we are showing is that we've got a lot of patience. Our projection is to keep the official cash rate at 5.5% until early next year. That we believe that will have inflation back down within the band, and at that point we can start thinking about normalising interest rates. That's all in our projection. The sticky prices that I've talked about, and particularly over the next couple of quarters, have been well signalled, and they are in our inflation projections. So it'd have to be something over and above that again to really, to surprise us. And we think the risks are balanced.
RBNZ Governor Adrian Orr speaking with Bloomberg's Heidi Stroud-Watts. He talks about patience. Well, it is what all the other central bankers are doing as well. Now, turning to India's elections, rival parties are accusing each other of illegal spending as authorities seize over $1 billion worth of illicit goods in their crackdown on black money. For more, let's bring in our South Asia government reporter Swati Gupta in Delhi. Swati, why is the amount of money spent, legal or illegal, on an Indian election so very high?
Well, it's basically the size of the electorate. You have hundreds of millions of people that you're trying to woo to get to the polling booths. So more than 950 million people are registered to vote in India, and the political parties have to get these voters to come to rallies, and they have to spend money on ad campaigns and every other kind of publicity campaigns. And in India, a lot of the money that is spent is actually unaccounted for. A very small percentage percentage. One of our analysts says that it would be less than 5% of the actual money spent is declared income. So it is actually about trying to serve the electorate and trying to get out the vote and paying all of that with cash, liquor, gold, drugs, whatever works.
Swati, what is the need for a party to use unaccounted or undeclared money to fund a campaign?
Yeah, so India is still a significant cash-based economy. So a lot of the transactions tend to happen in cash because that allows people to not declare that income to the income tax department. At the same time, you will have corporations and individuals who don't want to disclose the amount of money that they're giving to a political party or how much are they giving, plus who they are giving it to. So they tend to then give it in an illicit way so that the public doesn't come to know if a particular individual has donated millions and millions of dollars. We saw some of that come out when the electoral bond data was released, and we realized how much money was flowing through corporations. This is just another facet which actually has no data behind it. Only the people giving the cash and receiving the cash actually know what is going on.
So what's been the response from the authorities? What have they done to limit this flow of cash?
Yeah, so the main poll body, the watchdog that we have, which is the Election Commission of India, works pretty hard to actually catch this unaccounted money transactions which are going on. They have checkposts on major highways. They have people who are waiting at the ports, who are at airports. They even search helicopters as politicians are zigzagging and trying to reach rally points. But the size of this country and the population that exists here, it is almost an impossible task to actually capture every single transaction that is taking place, especially when it comes to rural India and how the money flows to voters through the polling booths, through the workers that are working on the ground. What India needs is comprehensive laws which would actually curtail how elections are financed in this illicit way.
Swati Gupta, a South Asia government reporter in New Delhi. Thank you. Now, still ahead, Kadara Capital shares their outlook on India's private equity space. That's after raising the biggest ever PE fund for the country. Their founder will be joining us for an exclusive interview. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching India Focus. India starts trading in about a minute and futures pointing to, well, let's say a flat open. We're keeping an eye on ITC, Interglobe Aviation, Fortis Healthcare. These are among the companies that will be out with earnings. Also, keep an eye on the Indian rupee. Danska saying that Indian rupee bulls are possibly wrong, that the Indian currency are headed downwards. Well, private equity heating up here in Asia. Investment giants KKR and TPG set to be exploring a possible buyout of Southeast Asian online real estate platform, Property Guru Group. The likes of KKR, Blackstone and Carlyle are also hunting for deals in India. Meanwhile, local player Kadara Capital raised a record $1.7 billion to put it on par with the deep-pocketed global players. Joining us exclusively now is Kadara Capital founder and managing partner Sunesh Sharma. Sunesh, good to have you with us. $1.7 billion, that's a massive amount. How will you put it to work?
Well, first of all, thank you for having me. Really appreciate it. No, I think India is a big market. As you've seen, a lot of people, if you look at Blackstone as an example, the second biggest market after the US is India. So I think the depth of the market has been very, very deep. I think what has happened, the exit market is supported, and that's why people have got more and more excited. And we feel very confident that we'll be deploying this money. We anyway take concentrated bets. So our view is we will be deploying this across 9 to 12 companies between 75 to 200, 250 million equity check from us and larger if we want to do it with our LPs. So we feel quite confident, and we have done it. If you see our recent deals have all been in that zip code. So, and the sectors remain the same.
How long do you think it'll take you to deploy all that $1.7 billion?
We're working on the assumption that we'll be doing roughly 3 to 4 deals a year. And basically, that's what we've done in the past. So about 3 years is what we target. Every 3 years, roughly, is when we have been coming back to raise money, 3.5 years. And we feel the same this time around, that in about 3 years from now, we'll be back raising the next one.
What favors India in comparison to the other Asian markets? What advantages does India have?
No, I think it's a very, very good question that you asked. If you look at it, it's a large, growing, the nominal growth of the market is already double digits. So if you can invest behind good companies, you'll get a very big growth behind you. So one is large growing market. Second is the under domestic consumption. So if you look at it, we are a very, very big domestic consumption economy. We are trying to build exports, but our focus has primarily been the domestic consumption. Third, if you see the geopolitical position that India is in relative to the other markets. And fourth, which a lot of people miss, is now India has a very, very strong demonstrated track record of very large exits, very, very large exits, which does not exist. Frankly, the depth of the market has surprised everybody. There are large firms which have sold more than $1 billion on the exchange without moving the stock price. And that has been a huge positive for the whole industry. And that's the exit has also been a big, big opportunity. And of course, a lot of companies to invest in. Just listed alone is 6,500 companies in India.
Suresh, you talk about exit. What's your exit strategy? What's the strategy for exits for you?
So us personally, we believe that you focus on building good companies with good management teams, highly target market leaders, and exits usually happen. But the focus has been look at a variety of exits, plan the exits when you invest. So don't focus on the exits after you've invested. So we start working on exits the moment we start investing. Of course, typically it's 5-year hold that we work on. But we have sold businesses to strategics. We have sold to other large private equity firms like you were talking about. They've raised a lot of money. And we have listed a lot of businesses on the exchange. And we have benefited from all 3 models of exit. And all 3 are open in India. If you build good companies, all 3 are open in India.
India's PE story is a very strong one. Who do you think are the biggest beneficiaries? Do you think the global funds benefit the most?
I would say if India makes money, the biggest beneficiaries are the LPs, because then they basically have invested in all kinds of funds. I believe this market has been very ripe for the large global private equity firms. As you know, pretty much everybody is in India. And interestingly, a lot of their Asia heads now sit in India. You take any of the global private equity firms, the Asia heads now sit in India, not in Singapore. So they have actually decided that India is a big, big component of their growth strategy going forward. But I feel at the same time, domestic funds are also doing extremely well because they can exit to these larger private equity firms. They can exit on the market. I always believe if you can build a company where the enterprise value is between $500 million to $2 billion, it's a great exit story, whether to the markets, whether to the large private equity firms or to the strategic. So I would say both the domestic as well as the global guys are beneficiary, but performance is the underlying important benchmark for it. Sorry.
Performance and returns, Sunesh, I'm just wondering, with valuation so high, what do you make of that? I mean, and what do you make of the performance and returns that can be expected?
No, it's if you ask me, that's the number one question. Now, my number one question everybody asks, valuations are high. But I think important thing is you have to look at by sector. So if you look at consumer and pharma and healthcare, valuations are very high. And then we start thinking if we can carve out a niche deal, we can create a platform and build on top of it, or we can do the derivative demands. So when consumer was very high a few years back, we did a lot of packaging businesses which benefit from the same demand. But at the same time, if you look at some of the other sectors, if you look at financial services, if you look at tech services, I would say these two have been bedrock of making a lot of money for private equity. They are actually much more reasonably priced today. So then you have to be careful on where you invest, which sectors you invest, and more importantly, which subsectors you invest. Because that, to me, is going to help build the returns. So I think, yes, valuations are high, but you have to look at some of the sectors which are not trading as aggressively and basically see if you're comfortable taking the bets in those sectors, which we are. So we're spending a lot of time in those kind of sectors.
Where can bets go wrong when investing in India? We know that we kicked off the year. We made all sorts of assumptions when it comes to do with the Fed, the economy. They've all been wrong.
So I used to always say that India can disappoint both the optimist and the pessimist. But I personally feel today India is in a very, very strong situation. And only story looks like it could be a very, very interesting growth story. Now, what could go wrong? I would say geopolitically, any big event could be a big setback. Second, like you said, valuations are high. So if you buy at these prices, you have to be careful in what kind of companies you invest in. But can people make money? I personally feel people can make a lot of money. And third, I would say deal specific, you have to be very careful on the counterparty. When you're doing minority, or frankly, even if you're doing majority stakes, as long as there's a counterparty in India, it's very important to assess the counterparty well. And that is a very high determinant of success. Because like I was saying, our growth supports a lot. When you get nominal growth of 10 to 12%, that provides a lot of to your returns. But if you get a good counterparty, you can make a lot of money. So very, very positive on where the country is, but just be careful of where you invest in the valuations. I think that's the only thing you need to be careful of today.
Sunesh, thank you so much for those candid comments. Sunesh Sharma, Kadara Capital. India's been trading for about 7 minutes now. Let's do a check on how the benchmarks are doing right now. Of course, Asia is having a tepid day, down about 3 days in a row, pretty much unchanged for the Sensex index as we speak. In terms of the Nifty 100, it is slightly in the positive territory, and Nifty Bank index firmly in the positive, up about 0.5%. Plenty more ahead. Keep it here with us. This is Bloomberg. A lot for markets to digest. It is about Asia down for a third day in a row after losses in broader U.S. peers. The Hang Seng leading the pack lower, currently down by 1.5%. But gains for the Nikkei as well as the STI as well as the Kospi. Of course, when it comes to the Kospi, it is about the BOK standing pat. But the BOK did say they will keep restrictive stance for a sufficient period of time. Core inflation likely to be 2.2% in 2024. As projected, the timing for rate cuts pretty uncertain, according to the governor, but potential for rate hike is pretty limited. And he expects inflation pressures to ease in the second half of the year. Let's take a look where we are in terms of how the currency plays are doing at this point in time. And also the chip stocks, of course, NVIDIA is front and center. It gave another bullish sales forecast showing that spending on AI computing remains strong. Q2 revenue estimated at about $28 billion. TSMC getting a lift. Global mixed mode technology up by almost 5%. It is also about Korea and that $19 billion package to boost its chip industry. It is getting to be a very competitive space. And this is how it's looking. It is a strong dollar story. The dollar index currently flat. The Korean won at 136 right now. And the Chinese yuan at 725.37. That fix at the lowest since January. That is it from Bloomberg Markets Asia. This is Bloomberg.